And this week, I'm sure most of you guys know it's the bear market blues over here. Yeah, a lot of you guys are feeling it also. CPI data on Tuesday released at 8.3%. And this was one of the biggest reasons why the market tanked, in particular Bitcoin came down all the way from 22 or maybe 23,000 and it's right now trading at about I think 19,008 last I checked. So we'll talk about that later, and also what to expect during the upcoming FOMC meeting, because that's going to make the market to be quite volatile and it's coming up on Tuesday and Wednesday next week. As usual, not financial or legal advice, and a quick shout out to all our current gatherer members. Allow me to start with Andrew, Yo-Yo, Wendy, Edward, Adam, Alex, Shafiq, Sisi, at most, Eric, Imboy, Cody, Hazik, Is, Fitri, Artip, Morpheus, Urshad, CG, Balls, Waki, Dina Leo, Kit Mokai, Kelvin, Kai Lanzu, Thien Roy, Tommy, John, Rodney, Jin Kang, Junlo, Helmi, and Adrian. Thank you all so much for your support. For those of you guys who are interested to join us, yes, I don't want to say how many spots we have open left. I think it's about 8 or 10 more spots. And remember, you can get a 50% discount for the first month if you approach any of these gatherer members. Each of them has a referral code. Within the first 5 days of your purchase, if you're not satisfied, just let me or Alex know. We will immediately refund you 100%. No questions asked. So you can have like a 5 days trial for free somewhat. Let's talk about our last week's recap. First of all, the Queen is dead. She is the longest British serving monarch. Her reign lasted 7 decades. We talked about what are the ramifications for the UK economy. Obviously, it's not good because right now they have to print much more money. They have to change things from God Save the Queen to God Save the King, blah blah blah. And winter is coming, in particular from Vladimir Putin. He will not supply a single drop of energy to the West, and because of that, the European Union right now is facing very high inflation. And I say it's like 9 or at least 10%, way higher than the United States. To tackle inflation, the European Central Bank, for the first time since 2011, they hiked rates by 75 basis points. Now this is unprecedented. Yeah, and we can see right here, central banks right now around the world, they are ramping up their interest rates to fight against inflation. All but Japan though. And why is Japan refusing to raise their interest rates? We also talked about it last week in depth. In particular, their GDP has been stagnant for more than 30 years. Right? You see, Malaysia's GDP has been growing, United States GDP has been growing, but Japan has kind of been a bit lackluster. So therefore, they cannot raise interest rates, because if they do, then after that, they will stall their already stalled economic growth further. Okay, and this is why you see the Japanese yen has fallen to a 7 or maybe 8-year low against the Malaysian ringgit. So for those of you guys who are interested to visit Japan, now might be the best opportunity to do so. Yeah, so that's roughly what we talked about last week. Now, on to this week's news. It has been a really volatile, I would say, 2 weeks now. We are back to extreme fear, then back to fear, then extreme fear, and this week we're back to fear again. Yeah, no surprises here. But one thing is certain, apart from all this volatility, we are definitely in a crypto winter, in a bad bear market right now. And I always say that whatever rally that we're currently seeing, I will call it a temporary relief rally. So don't keep your hopes up. Don't try and hope for 100k BTC by the end of the year. Yeah, that's pretty much impossible to happen already. Pretty volatile week. Next up, let's shift on over to the daily chart. Yeah, we are back to where we started a week or two ago. We skirted down below 19,000 or perhaps $18,000. Then immediately, during the earlier part of this week, Sunday, Monday, and Tuesday, now these 3 days, Bitcoin climbed all the way up to about 22,500. Then after that, it failed to break the 22k resistance, quickly crashed back to the 20k support. And over here, you see this spinning wick right here. We call it the spinning top wick. Okay, this center wick right here. This goes to show that there is a strong fight between buyers and sellers. And it happened on Tuesday. Obviously, buyers, they lost. And right now, Bitcoin is trading at the low side of $20,000. And last I checked, it's about 19,008. Now, the question is, will Bitcoin be able to hold 20k? Well, I don't think so. Things are not looking very great right now. But that entirely depends on the FOMC meeting, which is about to be announced on the upcoming Tuesday, 20th to 21st September. So keep your calendars put some notifications over there lah, so you guys can expect some volatility ahead. But we'll discuss about this in my upcoming slides. Now, main reason why the market dipped, right? We see on Tuesday, obviously it dipped right here, right? Well, on Tuesday, CPI data was unveiled at 8.3%. It is 0.2% higher than analysts' expectations. Analysts were predicting 8.1%, but a lot of people are saying that, even though CPI came out at 8.3%, compared to July CPI of 8.5%, inflation actually came down. So I don't see where's the bad news. It should be a good thing, right? But apart from missing analyst expectations of 8.1%, when we dig deeper, the core CPI, if we exclude volatile products like gas and food, the core CPI rose by 0.4%, from 5.9% to 6.3%. CPI's food index surged 11.4%, largest year-over-year increase since May 1979. Food prices were up by 0.8% in the past month alone. So what does this mean? This means that although we see overall inflation falling by a tiny bit, but the core inflation actually went up, and it's way worse than expected. That means the declining prices of gas and fuel has already offset, the rising prices of other goods has already offset the declining prices of gas and fuel. Right? So therefore, inflation is not cooling, it just went deeper into the core. It became a much bigger problem. And this is what really spooked investors. This is why they, immediately after the CPI data was unveiled, they dumped the market, and it prompts the Fed to be much more aggressive during their upcoming FOMC meeting. Because despite their consecutive rate hikes of 75 basis points, we know in May they hike rates by 75 basis points, then in July or August or somewhere along those lines, they hike by another 75 basis points. But all this aggressiveness was not even enough to meet analyst expectations when it comes to the inflation data. So it goes to show that inflation has proven to be more sticky than expected. And the market reaction, well, prior to the announcement, many investors, including me, I was expecting a much better reading for the CPI data. I was like, hey, actually, it might hit analyst expectations, or it might be lower, maybe about 8%, maybe 7.9%, which is why a lot of people went long. And prior to the announcement, you had Bitcoin pumping all the way up to about almost 23K, see, 22,800. Right after that, 8:30 p.m. Tuesday, Malaysian time, I was on my Binance app. I set an alarm, and I looked at it in front of my very eyes. Bitcoin dropped 6%. And in that instant, I knew the CPI data really disappointed investors, and I decided to do a tweet and so on and so forth. Within the next 12 hours, Bitcoin skirted on a 15% drop. Obviously, buyers, they surrendered to sellers. A lot of long positions were liquidated. And over here, too many people went long prior to the CPI data, and you have yourself a long squeeze. Over $240 million of long positions were kind of wrecked when the CPI data was unveiled. And this further add more sell pressure into the market, which is why we saw so much volatility, particularly on Tuesday itself. So yeah, Bitcoin was not the only victim here. When we looked at crypto in general, yes, the crypto market